everybody. I'm Jonathan G. Blanco. This is the TF Podcast. Welcome to another episode where we talk about technology, finance, and business. And my guest today is Brooke. He is the founder of Hutt Capital. We're going to be talking about fund to funds as well as venture investing and just kind of that whole process there. So with that, Brooke, I'd love if you could introduce yourself to everybody.
Yeah, of course, and thanks so much for having me, Jonathan. Appreciate it. So as you mentioned, my name's Brooke Pollack. I'm the managing partner of Hutt Capital, based in Portland, Oregon. And, my background, I started the firm in 2018, and prior I spent 10 years in the institutional private markets space, across funds, secondary, and direct investing. And, I'm sure we'll get more into it, but, got very deep into the world of blockchain and crypto and, went full time with Hutt Capital in that space back in 2018. And, Hutt Capital, we're a blockchain venture fund to funds and direct investment firm. So we do a mix of both fund to funds as well as direct equity investments in this space. And we can go more into that, but that's the brief overview.
No, I'd love to. Before we get into that part though, I'd love to dive more back into your background, just kind of how you got into the venture space overall and what made that interesting for you.
Yeah, of course. So, I guess, I've not always been a technology forward or kind of interested person, but, started my career working for a family office consultant. We were a broad consulting firm for wealthy families on the investment side, but I worked in the private markets team. So we advise these families on investing in private funds as an LP. So is it everything from buyout, venture, growth equity, credit, energy, distressed debt, a lot of different things. And, really enjoyed that, really enjoyed the venture piece of it as well. And, after that, spent a couple years working for a firm called Hamilton Lane, which is a private equity advisor and asset management firm, now a public company. But, it was a similar model in terms of the advisory piece of it, but more for big pensions and sovereign wealth funds and large pools of capital of that nature. And we also had a lot of discretionary capital in funds. And I worked on the secondary team. So we managed a fund that bought limited partnership interests in private funds, primarily buyout and venture capital. So we would, evaluate those portfolios and, buy out existing limited partners in those funds and help GPs to restructure their funds and kind of some other interesting structures. But I moved out to Philadelphia for that, and then had the good fortune thereafter to join a venture capital platform called Greenspring Associates. And this was mid 2014, I kind of moved into venture full time. And, they're a large venture platform, fund to fund, secondaries, directs, all within venture. In particular, helped to build out their secondary platform, which just got started when I joined. Again, I had been doing secondaries at Hamilton Lane, but more broadly worked across the platform. So we were investing in, venture funds. We were doing venture secondaries, so both buying out LPs and venture funds, as well as buying stock from founders, management, early employees, that type of thing. And also just doing traditional growth stage direct venture investing. And, did all the above during my time there, but, had a long interest in the world of blockchain. Really just kind of going back to a couple of folks I went to school with who were early in the space and, doing very well for themselves and caught my attention. So, the problem was it really wasn't relevant for my day job for quite a while, in terms of what we were investing in. And then in 2017, started seeing a lot of these dedicated blockchain venture funds emerge. And, at that point, finally had an excuse to dig into the space where it was relevant for what I was doing for a living. And, went out there, got to know the venture funds in the space, built those relationships, spent much more time on education and learning and, building my network more broadly. And, that led to spearheading Greenspring's efforts in the space for the last year I was there. And, long story short, left in 2018 to pursue that piece of my work full time by starting Hutt Capital.
Yeah. Awesome. Well, before we get to the blockchain side of the investing, let's level set the conversation for some people that might be listening that may not be familiar with like what a fund to funds even is.
Mm-hmm.
And, so if you could kind of just lay that out for folks, that I think that might be helpful.
Yeah, of course. So a fund to funds, I guess as its name suggests, is a fund that invests in other funds. So typically, you can use venture capital as an example. If you invest in a venture capital fund, they're going to go and allocate to some number of startups and build a portfolio of startups. So a fund of funds does the same thing, except instead of investing in startups, you're investing in venture capital funds, which then invest startups. So a fund of funds might invest in a portfolio of 10 or 20 or 30 or some number of underlying funds and build a diversified portfolio within that part of the market where people can come in and get exposure to, a larger number of funds through one investment. So, for Hutt Capital, for example, we do on the blockchain venture side, we invest in, in our case, 10 to 12 blockchain focused venture funds and provide diversified exposure through one commitment. And this is kind of a long proven strategy. It's been around for a long time, kind of the whole fund of funds model. And it tends to have more success in more niche areas where the expertise and the relationships and the access are more important versus something like large buyouts, for example, where they'll kind of raise as much as they can, and access and relationships really are not important.
Got it. And so, can you touch on just kind of like that relationship on the fund of funds? Meaning, so if you're investing in if you're investing in a VC, you're essentially an LP to that fund. Is that correct?
Yeah, so it's a weird position because we're both an LP and a GP, right? We manage a fund, we're a GP of a fund, but we're also an LP and underlying fund. So we kind of sit on both sides of the table at the same time. Yeah, definitely accurate.
Got it. And then so when as an LP in that fund, are you just like any other LP in that fund, or are there any sort of special interest that a fund of funds would get versus a traditional LP? Or not a
So I
traditional
guess,
LP, but just like, if it was an individual or so forth.
yeah, I mean, inherently there's no benefit, from just being a fund of funds of that nature. That said, we are a dedicated firm in this space, so we're certainly valued by the underlying funds, kind of being a consistent, dedicated firm in this space. We'll also look for situations where we can leverage our position and our being a desired LP to try to get special economics or whatever it might be in terms of special terms and whatnot for to benefit our own LPs from that perspective. I think the key thing that differentiates us and certain other folks of our ilk is just building like real relationships with the underlying funds and really getting to know them very well individually and personally, and really building that close relationship, right? Because this is a very long-term partnership. We don't want to just collect quarterly reports and see what our returns are. And if we're going to grow our allocations in these funds, get access to the best funds, have these funds help us to access direct deal flow and kind of have like a mutually beneficial partnership, we need to get to know these folks and look for ways that we can provide value to them as well, outside of purely being, capital, from being LPs in their funds. So, we're always looking for ways to help underlying funds, whether it's, deal flow, fundraising, the perspective of an institutional LP, join the advisory boards, all that type of stuff, and really building close long-term relationships. And you are definitely seeing more of that these days, but there are still a pretty good portion of the LP universe that is very passive in that capacity.
Yeah. And so for you personally, when you think about so you have this fund of funds, like what is interesting to you in a fund of funds model versus just becoming a VC? Why not just look for your own deal flow, or where is that kind of how does that play a factor?
Yeah, so I guess a couple things. One, in terms of my my own background and expertise, and then kind of two, from like a risk return perspective in terms of the attractiveness of the model itself. My background, I've spent 10 years, investing in funds, doing secondaries, also doing venture investing, but not early stage investing. Right, my background is more, growth stage investing on the direct side of that. And doing that, but I wanted to do something where me and Hutt Capital could really stand out as a unique model, unique background, unique experience, and really offer something that was not otherwise available. And kind of we're tracking 65 early stage blockchain VC funds right now. So do they really need fund number 66? I mean, maybe or maybe not, but it's it's much more difficult to differentiate yourself and provide something that's not already available. With the fund of funds model, there are very few firms that look like us. We provide a very unique offering and a very unique partnership to LPs in this space. And, inherently, in terms of the fund of funds model, by diversifying across a number of funds, I believe it provides a very attractive risk return dynamic. And, almost all the funds in this space are emerging managers, right? I mean, blockchain has not been around for that long. The oldest funds in the space are maybe 6 years old, and most of them haven't been around for more than 2 or 3 years. So,
Yeah,
they don't have the same breadth of track record like you see in the traditional world. So there's a lot of selection risk where it's like, okay, I'm going to choose this one fund, and okay, like you pick the right. A lot of selection risk around choosing that one fund. So, by doing a fund of funds model, we can basically provide, broad exposure through one commitment across structures, across geographies. And, certainly in this space, the global nature, our global exposure is very important across different, subsectors within the market, kind of, folks who are doing, far off kind of futuristic crypto stuff and, much more practical blockchain stuff. And, kind of be, make sure we have exposure to all the above that's interesting. So, I think it provides a very, unique and attractive risk return in terms of the fund of funds model as well.
And is that part of the, I call it the sell to your LPs as well, right? It's like, hey, like if you're a part of this, then you're going to get broader exposure across the rest as well. And then like, that's also part of the thesis.
Yeah, I mean, it's also, certainly the access and expertise. I mean, we're as I alluded to earlier, there's 65 funds that we're tracking in this space. I mean, we know this space extremely well. We know the managers, we have very good relationships with these folks. And, we can both make sure that we have access to the best funds, as well as determine who are those best funds, which, because they are largely emerging managers, is a more difficult task than it might be if you're looking at all these brand name sandhill funds that have been around for 10 to 20 years, and it's, it's not the hardest thing in the world to figure out who's good at their jobs. So, on the expertise side, also, if you don't understand what the funds are investing in, it's very difficult to then assess those funds, because you're basically going to have to take them at their word for whatever they tell you if you don't actually understand what they're investing in. So, having the expertise within this space to actually go through the portfolio, make your own assessment of the underlying companies, what they're investing in, and also to, use your own network or, our own network in this space to go out, do a lot of, reference calls and, really get behind, okay, how does the market view this firm? How do they view the partners of this firm? What's their reputation with entrepreneurs? Outside of just the reference list that the GP is going to give you, which is always going to be pretty positive because it's their friends and people who have agreed to be references for them. So yeah, I mean it's a lot of different pieces, but yeah, I mean certainly the diversified offering in itself I find very attractive in this space.
When you think about the exposure that Hutt Capital has across the funds, is there like a limit that you're willing to invest in per blockchain fund, for example? Like we will only do at maximum, I don't know, 10% of our fund in a single allocation, or do you have parameters on that you're able to share? Or is it just depends on the scenario?
I mean, it depends. Generally speaking, we might allocate 6 to 12% of our fund to any single underlying fund. Our documents, of course, have legal restrictions around kind of maximum exposure to single investments and stuff like that. But practically speaking, most are going to be 6 to 12% within that range. There's always exceptions of different means, but that's kind of our target.
Got it. Very cool.
Yeah, and we're doing 10 to 12 funds from our own fund for context. So, we're much more concentrated than a traditional fund of funds. If you look like an average venture fund of funds, for example, they might have 25, 30 underlying fund investments. We're doing 10 to 12, and it's really for two reasons. One, given the space is a bit younger, if you're going to do a bunch of managers above that, you just kind of end up getting exposed to the same companies over and over, and the diversification kind of becomes fund. There are also a small number of funds that meet our very high bar from a diligence perspective, and we don't want to invest in more funds than we feel are warranted.
I'd love to understand how your conversations have evolved with your LPs or your, the LPs that you've been courting when you start talking about blockchain and cryptocurrency and so forth, right? I'm assuming like from when, you said 2018. So, even from then to now, I'm assuming the appetite has changed slightly, but, what are their thoughts when you say like, yeah, we're a fund of funds? There's like, okay, that's interesting, but like only for blockchain, VCs. How has that response been? I'm assuming it's probably pretty mixed.
Yeah, and on the last part of that first, in terms of the fund of funds, the model itself has been pretty well received, and I think people, value the expertise of a fund of funds in more niche areas, as I mentioned earlier. So, I find that folks are more open to a fund of funds in this space than they might typically be, and more willing to consider it, which obviously is positive from our perspective. But yeah, the conversations are significantly different than a couple years ago. So we got started in late 2018, which, as you know well, was like right at the depth of the crypto bear market. So, going out and trying to fundraise for a vehicle at that time, after crypto markets had tanked 80% during the year, was not ideal timing, I guess. It was a lot of difficult conversations. I'd say two things. One, the market opportunity has significantly increased in terms of the quality and quantity of opportunities since that time. The mindset around kind of some of the short-term thinking you saw in 2017 as you saw the ICO bubble has morphed significantly as well, where the people who are building in the space now are very long-term focused, like really trying to build sustainable companies, sustainable protocols, tokens, projects, whatever they are. So it's just a very, very different market than a couple of years ago, which is great to see. And the folks we talk to, I think, are understanding that, and that makes my conversations much more fruitful. But it's also that they've just spent much more time on education over the past couple of years and spent those years learning and tracking the market and understanding what's going on. So, relative to a couple of years ago, when we go into a conversation, there's just a much higher, level of education in advance of that conversation, which of course, makes our chat much easier. And we don't have to spend as much time on that, why blockchain, what is Bitcoin, all that kind of stuff, as we had to a couple of years ago. So yeah, there's just much more education, and, the folks we're talking to are much more educated than they were even just 2 years ago.
Yeah, I'm curious if they're ever like, hey, like, can you find me a company like X or a company like Y, or is there anything like that, or no?
Yeah, it's like we actually do work with our unlimited partners, the investors in our fund, to find companies to invest in, and we actually do that ourselves within our fund, which we haven't really covered. But it's a smaller part of what we do, but we also help them to get access to the top growth stage companies, and we do within our fund, but also help them to come in individually and do that. So some folks really value that. They like that we have a look through into all these portfolios and all their portfolio companies, and pretty unique position from that standpoint in terms of all the non-public intel and data that we have, which then if they're investors in our fund, they're privy to certain access to information as well, and they can get a look into what's going on. So some definitely place a lot of value in that, and both in terms of our ability to do directs, but also their ability to get co-investment, and us to help them with direct opportunities as well.
Yeah, totally. Well, let's shift real quick to just what's happening in the world, and not necessarily what's happening, but more like, if we all know what's happening in the world with the pandemic and that sort of stuff. But how has that been impacting just not necessarily like your fund, but just investing overall? I'm assuming you have a pretty good ear to the ground when it comes to like how investors or venture capitalists are writing checks to founders, and just curious, like, what have you seen, or what you've been kind of paying attention to or listening to from either some of your connects or what you're understanding in the market?
Yeah, so we've actually been doing a webinar series over the past couple months where we've been interviewing blockchain VCs. So we've been having a lot of these conversations, which are, I guess, available for others to check out, which you can do at huttcapital.com/webinars. But as part of that, we've been asking them what they're seeing in the current environment. What are they seeing? Over the past 3 or 4 months, as the world's changed quite a bit. And while obviously we wish it was under better circumstances and just natural versus due to a lot of the chaos that's occurred recently, but tech transformation has quickened quite a bit. In terms of the ability, I guess the willingness of people to consider like digital assets and digital money, due to a lot of the trends around COVID. And at the same time, you have the Fed printing quite a lot of money. And regardless of your view on Bitcoin and crypto and its ability to hedge a lot of that, I guess devaluation of the dollar, it's caused blockchain and Bitcoin and crypto to be more in the public conversation as a result, in terms of like, oh, how are we going to position our portfolio if this continues? Should we be looking at blockchain and crypto as part of that? And all of that has been very positive for this space. At the same time, because things have been a little slower, valuations have come down from pre-COVID times. So the opportunity set has been more attractive if you're a venture fund, if you're an investor from that perspective. So it's been, I guess, the opportunity from an investment standpoint, it's been generally very positive. So that's kind of what we've been hearing from the underlying funds.
That's great. How about, as a venture person, I'm assuming you also have understanding of what's going on in the overall financial markets. And, I talk to a lot of startup founders, and they hear things from, their investors are like, oh, we're not investing when the market crashed in March, they're like, oh, we're not investing because the stock market's down, right? And then so it's like, okay, I get that. And then the stock market has rallied since then. And like, well, we're not investing because things are uncertain. It's like, okay. So just curious, kind of just your thoughts overall with just what's happening in the market and how that particular influences decisions, and should it? And then we can even just talk about, I'm just curious to see your thoughts on the market overall after that as well.
Yeah, I mean, so I'm definitely not a macro investor, and I think if you are, it's a tough time because it would appear that the Fed is the Fed's actions is driving price action in the market versus fundamentals. So that seems like a difficult task for folks. So I try not to make any grand forecasts around the broader macro environment. Given what we do, investing in early stage startups and innovation. And I mean, frankly, nor do I think should you if you're investing in venture, right? Venture isn't driven by cyclical action, it's driven by long-term innovation, and you need to be investing consistently across cycles if you're going to be successful. And you can't be trying to time the market if you're doing venture, right? It's just kind of not a very sound strategy. Sure. That said, it does impact valuation, it does impact pacing. The more uncertainty in the markets, whether prices are up or down, people don't like uncertainty. So, as long as there remains uncertainty, whether it's due to what's the Fed going to do, what's the economic impact if we have a second wave of COVID, for example, which we're kind of starting to see, all of that is not good for certainty, and you could continue to see slower activity as a result. But yeah, I try to focus on the micro and kind of what we're seeing in this space, and leave the macro to smarter minds.
Sure. So Brooke, you're based out of Portland. Curious how that has impacted just kind of the perception of what you're doing, and just like overall, like do people care that you're in Portland as opposed to being like or do they want you to be in Silicon Valley or I don't know, New York City? Does it matter?
Mm-hmm. So, I mean, we get the question on occasion, but not very often, to be honest. And if you're doing early stage investing, I think the idea of being local is much more important than if you are a fund of funds or if you are doing later stage direct investing. I mean, as a fund of funds, with the ability to travel and do things online and through video conferences, I mean, you can kind of be anywhere and execute on a strategy like this. The biggest thing is just that it means you're going to travel a little more, right? Because you do need to be on the ground in those locations where the funds are, taking meetings, building those relationships and whatnot. But yeah, it really, doesn't impact whatsoever our ability to execute. The firms I worked at before this were in Philadelphia and Baltimore, and both very, very successful. And I think that's kind of indicative of the ability to do this from anywhere. And I think honestly, there's a benefit to not being in the Bay Area or New York, because there's this kind of like thought bubble, and everyone kind of starts thinking the same things, and I don't think there's as much independent like real thought from that perspective. Despite the insane amount of intelligence and innovation that occurs in those markets. Yeah. So I do think there's actually some value from kind of sitting outside and kind of viewing it from from somewhere else.
Perfect. Well, last question here is what from your engagement with these different blockchain funds, and what you're seeing, what's interesting right now? Do you know if have you heard much of like what are interesting investments or verticals or kind of things that are being looked at right now? Anything you can?
Yeah, so there's definitely been a lot of attention recently to the DeFi space. Couple of token launches that have been very successful in terms of the value created from those, and it's driven a lot of attention to that space recently. But more broadly, I mean, most of the capital is going towards financial infrastructure. If you think about the world of digital assets, you're basically building a whole new financial system from scratch, and you need a lot of the things that we have in our traditional financial system, and like just very basic things like exchanges and custody and trading, and a lot of the institutional grade services and products that real institutions who are coming into the space need and require and are used to. And I mean, all of that is basically being built from scratch on a global basis. So it's a massive opportunity from that perspective, and you continue to see a lot of investment in that type of infrastructure. I guess we've seen a little more recently in let's say non-financial areas. So we've seen more things.
Yeah. All right, Brooke. Well, now for the question that I love to ask everybody who comes to my show, and that is, what is a question that you have that you would like to ask our guests, or sorry, our audience, that they can think about as they go about their day?
That's a really good question. Let's see. So I guess one question, as and this could be anyone, who's thinking about their 401k to an institutional investor. If we feel like everything is overvalued right now, where do you? A tough question, and when I think people are thinking about a lot right now.
So unfortunately, it cut out right when you were saying the question. So sorry, what's the question?
So the question is, whether it's your 401k or if you're an institution investing a larger portfolio, where can you feel comfortable investing your money right now, where you think you're going to be very successful doing so over the next 5 years, let's say. Because if we feel like everything's overvalued, I think it's tough to figure out where you should be deploying capital right now from that perspective. And obviously,
it's startups. You got to put your money in startups.
Yeah, innovation is not cyclical, but if you think about the rest of your portfolio and a lot of the other stuff out there, I think that's something people need to be thinking about.
Definitely. Well, Brooke, thanks so much for joining us. What are some good ways that people can stay in touch with you or pay attention to what you're up to?
I mentioned we do have that webinar series that's currently active, which you can see on our website. You can follow me or Hutt Capital on LinkedIn, or as well as on Twitter. Hutt Capital is at Hutt Cap, and I am at BH Pollack. So we have our information on our website, so feel free to shoot me a line. And yeah, thanks so much, Jonathan, for having me. It was a pleasure.
Yeah, definitely. Awesome. Glad you were here. Everybody, thank you for listening to another episode of the TF podcast. Please make sure that you are liked and subscribed. And you can follow us on YouTube as well as on LinkedIn. I'm at JG Product or at TF Labs. And you can also find out more about what we're up to at tflabs.io. Thanks so much, and we'll see you all soon.
Thank you.